Hello, today, I will talk on the penalties levied by the Securities Market Regulator, Securities and Exchange Board of India. I will bifurcate the penalties into three types for better understanding. First, failures, that is failure by Securities and Exchange Board of India registered financial intermediary. Second into, the defaults, that is default by specific Securities and Exchange Board of India registered financial intermediary. And third into, other contraventions. Now let us discuss on the first, that is failure in detail. Failure to furnish any document, return or report to the board punishable under Section 15A. Here some explanation is required. What the board expects from a registered intermediary is, certain documents. Filing of certain returns in prescribed format. Periodic reports in prescribed or notified format and maintain books or other documents. A failure to furnish any document, return or report to the board, is a contravention of Section 15A. There is second part to the story. The intermediary furnishes or files false, incorrect or incomplete information, return, report, books or other documents. This is the second failure punishable under Section 15A. Now let us take a step further. The board determines the time limit for filing of any return or furnish any information, books or other documents. When the intermediary fails to file any return or furnish any information, books or other documents within the time specified therefore in the regulations or fails to maintain books of account or records. It is punishable under Section 15A. The Securities and Exchange Board of India requires every registered financial intermediary to enter into an agreement with his clients and redress such grievances within the time specified by the board. Failure to enter into an agreement with his clients by the Securities and Exchange Board of India registered financial intermediary, and failure to redress such grievances within the time specified by the board is punishable under Section 15A. Non-disclosure of acquisition of shares or takeover under the Act or rules and regulations made thereunder. Certain disclosures are required to be made before the acquisition of shares or takeover under the Act, that is Securities and Exchange Board of India Act or rules and regulations made thereunder. The following disclosures need to be made. Disclose the aggregate of his shareholding in the body corporate before he acquires any shares of that body corporate. Make a public announcement to acquire shares at a minimum price. Make a public offer by sending letter of offer to the shareholders of the concerned company. Make payment of consideration to the shareholders who sold their shares pursuant to letter of offer. The penalties that will be levied will be discussed later. This takes us to the second type. That is default by specific Securities and Exchange Board of India registered financial intermediary. Here we have the defaults committed by asset management company, alternative investment fund, INVITs, real estate investment trusts, investment advisors, research analyst, stock broker and lastly by mutual funds. Let's us understand one by one. The AMC fails to comply with any of the regulations providing for restrictions on the activities of the asset management companies. The INVITs, REITs fails to comply with the regulations made or fails to comply with the directions issued by the board in respect of INVITs and REITs by the board. Investment advisor or research analyst fails to comply with the regulations made by the board or directions issued by the board. For the stock brokers, we will discuss separately. Last is the default by mutual funds registered with Securities and Exchange Board of India. There are 6 defaults by the mutual fund that are penalized. First, it carries on any collective investment scheme, including mutual funds, without obtaining such certificate of registration. Second, fails to comply with the terms and conditions of certificate of registration. Third, fails to make an application for listing of its schemes as provided for in the regulations governing such listing. Fourth, fails to dispatch unit certificates of any scheme in the manner provided in the regulation governing such dispatch. Fifth, fails to refund the application monies paid by the investors within the period specified in the regulations. Sixth, fails to invest money collected by such collective investment schemes in the manner or within the period specified in the regulations. Third bifurcation is other contraventions, like fraudulent or unfair trade practices, alteration, destruction of records or failure to protect the electronic database of board. And lastly, contraventions where no separate penalty has been provided. Now, We will talk on the penalty. The penalty levied can be bifurcated into 5 types. Number 1. Which shall not be less than 1 lakh rupees but which may extend to 1 lakh rupees for each day during which such failure continues subject to a maximum of 1 crore rupees. The penalty levied for failure or default made with respect to the following. Failure to file, furnish or maintain documents, reports and returns. Second type of penalty levied which shall not be less than 1 lakh rupees but which may extend to 1 lakh rupees for each day during which such failure continues subject to a maximum of 1 crore rupees are 3 times the amount of gains made out of such failure, whichever is higher. This is levied in case of defaults by AIF, INVITs or REITs. Third type of penalty levied which shall not be less than 5 lakh rupees but which may extend to 25 crore rupees are 3 times the amount of profits made out of such practices, whichever is higher. This is levied in case of defaults by way of fraudulent and unfair trade practices. Fourth type of penalty levied which shall not be less than 10 lakh rupees but which may extend to 25 crore rupees are 3 times the amount of profits made out of such failure, whichever is higher. This is levied in case of insider trading and non-disclosure of acquisition of shares or takeover. Lastly, the penalty on broker. The broker is liable for 3 defaults. Fails to issue the contract note. Fails to deliver any security or fails to make payment of the amount due to the investor. Charges an amount of brokerage which is in excess of the brokerage specified in the regulations. The penalty will be applicable depending on the failure. The adjudicating office will decide on the quantum of the penalty considering the 3 points. First, the amount of disproportionate gain or unfair advantage, wherever quantifiable, made as a result of the default. Second, the amount of loss caused to an investor or group of investors as a result of the default. And lastly, the repetitive nature of the default.